Hope you're all well. Let's have a look at the economic calendar for the week ahead. Before I start, I want to say that fundamentals is a very messy and complicated subject, and it can cloud decision making. It's a never-ending rabbit hole, so take it with a grain of salt. What I'm explaining to you is how I anticipate market's perception. Now, market will react to these news events based on how big money as a whole perceives like the results. And the big money, I think, is more interested in the interest rates. So I think big money is looking at these events and news and the data to anticipate future interest rates because that's more important, and I'm going to explain that to you. So this week is a USD driven week, so focus is on the dollar. Monday there's not much news events, so it's a technical market, so expect tech to work. Tuesday we've got consumer confidence and FOMC minutes. Now FOMC minutes is a report that they do 3 weeks after the interest rate decisions, kind of like a review, and this could, keyword is could, provide insight into Fed's future thinking in terms of monetary policy. And again, that anticipation is what could spark a reaction. It might not, it might just be very like a non-event. You never know, but that is something to keep an eye out on. And then Wednesday, we've got NZD interest rates. If that's something you trade, that's something you have to keep an eye out on. I don't really. So we've got GDP and PCE. PCE is something that is to keep an eye out on because that is essentially a measure of inflation, and it could again affect that market perception. So if big money is more interested in anticipating the future interest rates, then this is a maybe it could offer a clue into like the direction of where it's heading. So a higher PCI could strengthen the dollar because if inflation is rising, so if the PCE is rising or above target, it could signal that Fed might increase interest rates in the future to combat the inflation, and that increase in interest rate, is would give them better returns. So that attracts foreign capital. Gold is also an inflation hedge, so gold will go up. And if it does come down, so let's say if the PCE is lower, that could signal a cooling inflation. And what that would mean is it reduces the urgency for Feds to increase rates, and lower rates or a less urgent and a less urgent Fed stance in terms of rates and less future interest rates essentially could decrease the demand for the dollar because then they're getting less for their dollar. It doesn't attract as much capital, and cooling inflation would also mean risk on. So gold will go down and money will go up in stocks because if inflation's coming down, it signals a stable economy and investors are more likely to put money in stocks. So risk on driven moves potentially, and yen pairs down. Then finally, Thursday, we've got some yen news, but not much. And Friday, it calms down as well. So I would expect most of the volatility potentially Tuesday, Wednesday. And then Friday, we could potentially get some decent profit-taking moves if there's not that much volatility on Friday and you've got shit that lines up. There's not much that's driving the market. It could be a decent time for profit taking, especially after the potential fuckeries of the midweek news events. So do trade defensively. I would say Tuesday, Wednesday. Be careful. Monday, if you see any decent trades, it's worth taking them. And then also end of week will present some opportunities. So remember to sit on your hands, to be prepared, plan all your scenarios beforehand, and yeah, let's have a smashing week, inshallah.